As there are many different chart indicators, we will take a look at four of the more commonly used ones: MACD, stochastic, RSI, and parabolic SAR. These are also known as oscillators. MACD stands for Moving Average Convergence Divergence and is used to indicate a potential bullish or bearish trend reversal. The indicator consists of two lines representing a fast and slow average, along with a momentum histogram, represented by bars in the middle of the indicator window. Most charting packages use a default setting of 12 periods for the fast-moving average, 26 periods for the slow-moving average, and 9 for the histogram. When the moving averages get further apart, the histogram gets bigger, representing divergence between price and momentum. When the moving averages get closer together, the histogram gets smaller, representing convergence between price and momentum. When the MACD indicator shows a crossover of the moving averages and the histogram becomes smaller and eventually appears on the opposite side of the neutral level, this represents a reversal in the trend. Stochastic indicators are also used to determine potential trend reversals. They show a percentage scale on the x-axis with two horizontal lines at, for example, 80% and 20%. This can be changed depending on your personal preference. When stochastic lines are above this 80% level, it indicates an overbought market condition. An overbought market condition is when an asset rises in value very quickly due to a surge in demand, pushing the price to a level above what the fundamentals would appear to support. When stochastic lines are below 20%, it indicates an oversold market condition. An oversold market condition is when an asset drops in value very quickly due to a wave of selling, pushing the price below what the fundamentals would appear to support. Stochastic indicators are normally used as a secondary indicator to an MACD. The main objective for a stochastic is to indicate that the market is moving to the end of its current trend and is potentially looking at a fundamental change in direction. RSI stands for Relative Strength Index and is very similar to a stochastic indicator because it also identifies overbought and oversold market conditions. The default setup in most charting packages is 14, which means that it's based on a 14-period moving average. An RSI indicator is represented by a single line, which is graded from 0 to 100. Anything below, for example, 20, indicates an oversold market condition, and anything above 80 indicates an overbought market condition. RSIs are often used as trend confirmation indicators. Their neutral level is 50. If the RSI is above 50, it is indicating an uptrend. If it is below 50, it is indicating a downtrend. A parabolic SAR stands for stop and reversal and is used to identify trend endings and potential reversals. A parabolic SAR consists of dots on a chart, which indicate reversals in price action. If the dots appear below the price action, it indicates an uptrend. If the dots appear above the price action, it indicates a downtrend. These four popular technical chart indicators are primarily used to identify a change in the prevailing trend. As these indicators are displayed underneath the price action, they offer a clear way to spot important changes in the market.
Okay guys, I hope you enjoyed the video. If you enjoyed the video, put 22 in the chat box. Put 22 in the chat box if you enjoyed the video. It's basically talking about four very strong popular indicators that many traders apply in their trading. So we talked about the MACD, we talked about the RSI, the stochastic, and the parabolic SARS. Okay, and everything is default in the MT4. If you go to your indicators, And under the trend, sorry, under the oscillators, you see all the ones I was talking about. This is the MACD, this is the RSI, this is the stochastic oscillator. Parabolic SAS is not here. I think it should be under custom. Let's check it. I think it should be under custom. Parabolic SAS. Okay, I can't find it there. Let me check it. It's here. Can't imagine. I hardly use it, so I can't believe I'm looking for parabolic SAS. See that this okay, it's under trend. Parabolic SAS under trends. Under trends. Parabolic SAS. Okay. 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 All right. Today we're looking at the moving average divergence strategy. Moving average divergence strategy. Moving average convergence indicator, that's the MACD. Moving average convergence divergence indicator, that's the MACD. We're going to use look at how you can use MACD plus divergence as a very powerful trading strategy. Very powerful trading strategy. MACD plus divergence. MACD plus divergence. Now, some people don't trade any other thing other than this, and they've been successful in their trades. At least in a day, they will see one or two powerful trades they can take with this strategy, MACD divergence strategy. Okay, and I want you to understand, like I told you yesterday, that something is always bigger than strategy. And what is that? Put it in the chat box. What is that thing that is bigger than strategy? What did I say yesterday that is bigger than any strategy? Put in the chat box now. What is that thing that I said yesterday that is bigger than strategy? Your eyes and price action. Yes, so your eyes is the best indicator and price action. Okay, actually yesterday I said price action, chart patterns, candlestick patterns is bigger than any strategy. In fact, without it, no strategy can work. Without it, no strategy can work. Okay, you must always apply it to every strategy that you think that you are using. So today we are going to talk about this one powerful strategy I also love using, and I want to share it with you. MACD plus divergence. MACD plus divergence. All right. So how do we do that? You go into your indicator window. Under oscillator, you see the MACD. By default, I already changed the color. By default, this is how it looks like. The main is silver, signal line is red. Okay, and we have the fast EMA is 12, slow EMA is 26, and MACD SMA is 9. All right, so I just love leaving it at the default settings. However, you can decide to change the colors, but default, this is how it looks like. We have the signal line, and then we have the main line above it, and then this red line, I was the one that added the red line, so you can change to any color that pleases you. I can decide to make the main discolor my signal line blue. I can make it bold. I will make it bolder. My level, that's this 0 level here. I just love to add the 0 level, so I just place it there as red, as you can see. So you can actually color it anyhow that you want. Okay, in this strategy, we're looking at when there's a divergence between price and MACD. When there's a divergence, which means price is moving in another direction and then the indicator is moving in the opposite direction. It simply means that very soon price is going to turn in the direction of the indicator. Example, if price is going up and indicator is going down, that is divergence. Price is going up, we'll make our price blue. Price is going up, indicator is going down, that is a divergence. Or price is like on the same level, almost on the same level, okay, but indicator is going down, it still can be seen as divergence. Okay, this is also divergence. We'll now see how we apply it on the chart. This is also a kind of divergence. Or the other way, price is going down and indicator is going up, or it's just straight, is another kind of divergence. Okay, another kind of divergence. So as you can see, these are when you see that there is divergence in the market. Now, how do you look for divergence on the MACD? You see, when price is below the 0 line and it's forming ridges like this, you can see this inverted mountain. This is mountain. I call this inverted mountain. You can see there are two mountains there before it crossed the 0 line. This line is the 0 line. Before it cross the 0 line to form another small mountain, then cross back down the 0 line, form another inverted mountain, small mountain, inverted mountain. Okay, anytime that you see price, let me look for an example, that this mountain here, the two mountains at the, you can see the indicator was forming three mountains here. You now see that this mountain, the peak of this mountain, you can actually draw a line moving down, okay, and price, the peak of price, that is the peak of price on the opposite direction is moving up. This is a sign of divergence. It means that price is going to turn in the direction of, it means that price will turn in the direction of the MACD. As you can see right here, price moved up, MACD was moving down. It simply means that price is about to also drop. Okay, and you see what happened right here. Price dropped massively. Price dropped massively. Price dropped massively right from here. Price dropped massively down. You can see that. Let's look for other areas where we can see. Now look at these two regions, this and this. This is not a divergence. Why? Because MACD was going down. Price was also going down. Sorry, I picked the wrong two. Price was also going down, even though this price still went down, and there's a reason for that. Of course, the reason for this is because price is definitely bearish. So, but you can see price was bullish here and then it turned bearish. So there's a difference there. But you can see this is not a divergence. This is not a divergence. So you need to know the difference between what a divergence is and what a divergence is not. So let's scroll back and see areas of divergence, areas where we can see divergence. Okay, this look a little bit small, but this is the divergence right here. MACD going up, price going down, or going flat. Okay, this is the divergence. So what happened? Price went straight up. Price went straight up. Okay, let's look for more examples. More examples. Okay, look at right here. This was MACD divergence. What did price do? Price was dropping. Right from there, price was dropping, and after this, price went up. Okay, I'm just showing you. We now look at how it's being traded. How it's being traded. Okay, let's look for more examples of divergence. There are other ways you can use the MACD, but I'm looking for divergence because it's always very powerful. Look at here, price has been bullish. When it got to this place, what happened? MACD started coming down. Okay, and price was still going up. Price was still going up, and after that, price dropped. And see, price dropped for a long time. Price dropped right from there for a long time. Price dropped for a long time. Okay, so this is 1 hour time frame. Okay, you can catch so many almost every day. You see a lot of that in a 15 minutes time frame. Okay, you can see this. This is another example. Okay, if you have your chart open, you can begin to look for where you can see this pattern in the market. So how do we trade this? How do we trade it? Now, trading it is not different from what I explained to you yesterday. Trading it is not different from what I explained to you yesterday. Number one is this. If you look at this example, okay, this MACD actually formed like 3 ridges. There was one that happened here, okay, which definitely, if you saw this, you could have entered the market around it because this was a bullish engulfing candle. If I expand this to 9, it disappear. February 6. Okay, thank God. Okay, this was a bullish engulfing candle. Okay, this could have been an entry for you on this first ridge here. This place could have been an entry for you. But what the price do? Price kept moving downwards. Price kept moving. You can see this. This was a bullish economic candle. Price went up a bit and then dropped back below this guy. Okay, now how could you have known that this is going to happen? I must tell you that you may not even know that this will happen. You may not know that this will happen at all. Okay, that price will come back down. But another good way you could have been able to do it is insert a moving average, maybe like 13 moving average. Okay, 13 moving average, and look at it. It can also help you that, okay, before I enter this market, let there be a cross. Okay, or you wait for a higher high. As this market went up like this and it came down, okay, let it give you an entry. That could have been. But however, you also notice that price came and gave us another There was another divergence right here. Okay, and here was a clean divergence. Price went, okay, crossed up. This could have been an entry for you. This could also have been an entry, because price actually went up, came back, went up, came back again, then gave you two these two hammers, two hammers. Could also be called tweezers because they are almost alike. A bearish hammer and then a bullish hammer. At the close of this hammer, you could enter, but you can actually wait for price to cross above this 30 moving average, and then you take your entry here. I actually love the 30 moving average because it works well with this strategy. Okay, let's look at the other example. You can see right here also divergence. Price crossed above the 30 moving average with a bullish engulfing candle. After the close of this candle could be an entry for you, or you allow the price to come back to touch the moving average just like yesterday, and then enter at this other engulfing candle. Either you enter directly after this, or you enter after this guy. Okay, now this is just to get a safer trade, because when price comes, this is a can see this is lower high, sorry, lower high, lower low, lower high, lower low, and then we have a what? Lower, it's almost the same, but let's say the lower high, but here we have a what? Higher low. So this was where the change in direction actually happened. Okay, but this divergence can give you an earlier entry at the top of this fact right here, at the top of this stuff here. Okay, that's another way we can enter this trade. Okay, look at this guy right here. This is divergence right here. You can wait until price goes below the 30 moving average. Okay, or once price, you can see these two candles, they are two powerful bearish candles. Okay, it shows that this divergence is an entry already. This will have been a good entry for you. Okay, but if you enter, price will have ranged at your entry point for a long time, but it never came up to take out your stop loss, and they can see price rallied. But I will have preferred a better entry around here. When price came around here, maybe when I saw this bearish hammer, right here, of course, price I started doing lower low, lower high, so I know that already trend has changed from bullish to bearish. Okay, but when I enter here, I put my stop loss above these guys. I know that I can take on the trade on and on like that. Okay, let's go to the 15 minutes time frame. Another way you can use it, you can also even use it with the parabolic SARS. I don't know if anybody loves that. I hardly use it, but some people just love it. You can't do without the parabolic SARS. Now look at the 15 minutes time frame. Okay, can we see divergence anywhere here? I saw a small divergence. I don't know if you saw it. Price going up and MACD going down right here. And expand it. MACD going down, price going up. As you can see, there was a drop. Immediately came under the 30 moving average. You enter and you are selling. Okay. Well, is this a divergence? The answer is no. This is not a divergence, even though price obeyed the move. Okay, that's why we'll be looking at some other strategies that you can use to trade the MACD. Look at this. Look at this right here. Look at this right here. There are some trades you can close your eyes and just enter. When you see something like this, and you see price move above the 30 moving average, fine, close your eyes and enter the trade. and close your eyes and enter the trade somewhere here, and see take it up. Stop loss under the divergence, and then of course your take profit will be at this resistance area. That's about 40 to 50 pips. This is where your stop loss will, your take profit will be, right here. That's where your take profit will be. Okay. Let's see again. This was a long divergence. You can see this guy here now. I hate to see situations like this in the market. I just hate it. This divergence is too crazy. This divergence is too crazy. Here you would have thought price was going to you are going to enter. You could have entered the market right here, and then to take you out. Because if you put your stop loss here, this is a losing trade already. Okay, because price kept diverging. But after this guy, there was no real break below 30 moving average until price started coming down here. Another thing that can save you is, now listen to this. Price action. You can see price was going up here. This is a low. Okay. In fact, this will have been a losing trade. There's nothing you can do. Even price action is saying that you should sell here. Even price action saying you should sell here. This will have been a lost trade. That's the truth. So there's no perfect 100% strategy. Because if I say you use higher high, higher low, this move took out two different lows. Took out this low, took out this low. Okay? So this is a very good example of an entry. But what happened? Price did what it did. Yeah, I think it happened to the last trade I tried to send. I traded AUD USD that I sent on, was it yesterday? This is exactly what happened. Okay? Price just rallied to the upside. But later, now came here when it took out this low, and then the moving average to change direction. You can perfectly enter this trade. Could entered here when price came down, came up to touch the moving average, and then gave you a bearish move. Could have entered here also. These are possible entries. You could have entered here also. Okay, so these are entries for this move. Are we following? Please put a two in the chat box if you are following. Are we following, please? Put a 2 in the chat box if we are following. Okay, awesome. Let's look for other patterns. Look here again. Same thing here. Price has been making lower lows. Actually, here you could have been saved. Why? Because you can see price was making divergence. Okay, this was where divergence ended. Yeah, because here, okay, here is also a divergence. It's also diverged up to this place, because this is straight and this is down. Okay, so how could you have traded this? Price didn't really close and come back. Didn't really close and come back into the 30 moving average. Okay, and then price is still making lower low, lower low, lower high, lower low, lower high, lower low, lower high. Okay, you still have lower low, lower high, lower low, lower high, lower low. Can you see? It was until it got here that it made an higher high, higher low. This will have been my entry. This will have been my safe trade right here. Okay, so it will have been very, very, I won't see it as a very profitable trade, because we are looking at taking a profit around here, around this resistance here. Okay, but how many pips was that? Not really nice, but what did I say? This 93 pips is big. This 93 pips, and then your stop loss is around here about 60 pips. GBP carries a lot of pips. So this move is about 90 pips, okay? And then your stop loss is about 40 pips. So it could have been a good trade if you entered around here. That was when the orientation, the bearish move changed to bullish move. Okay? After the bearish move changed to bullish move. Any other one? Okay. Now I don't know if this guy will work. Parabolic SARS, I've not tried it before, but probably you guys can go and try the parabolic SARS and see if it can also give you a good entry. Let me just show you parabolic SARS. Okay. Make it black. It's too black. Let's make it red. Still not bold enough. Let's make it bolder. Yes. Okay. So for this parabolic SARS, when market is bearish, parabolic SARS will be above. When it's bullish, it will be below. Bearish, bullish, bearish, bullish, bearish. So which means whenever you have divergence, you wait until parabolic SARS come below, and then you can take an entry right there. Okay, this could be an entry for you, or you wait for this one and then you enter here. So I think that's one way that can be useful. You can see here, this guy was bullish, bearish, but price was still above. Bullish, bearish, but when you got to this place, it became bearish, and then see moving average to bearish. This could have been a good entry. You could have waited. So double confirmation right here. Bearish and moving average bearish, but here bearish but moving average is bullish and the price is going up. So you can go in line with the moving average. Okay. So I can even create another strategy from here that I will only take parabolic SARS in direction of what, or moving average, which means I will, when the moving average is moving down, I will only be selling when I see parabolic SARS above, which means I will sell. I will come out when this guy comes down. When it comes up again, sell, you know, come out. Well, I don't use this. I really may not be dependable. Why? Because price will have done what it wants to do. For example, imagine you entered it and you entered around this place. You expect the price is still coming down, but price has already gone back almost to your entry before parabolic has changed direction. So price has gone before your indicator. So, well, you can go and explore the parabolic SARS, but I'm not recommending it right now. But if you see better use of it, that'll be good. So this is how the MACD divergence works. I use it a lot, almost every day. Once in a while, once I want to get when I want to trade reversals, I always bring out my MACD to check, to confirm. Okay, for example, when market was doing bullish here, bullish rising, I just bring out my what is MACD coming down. Okay, I know that I'm ready to come down. Look at this place, MACD going up. Sorry, price action going up, MACD straight coming down. So you know that there's an entry right here. Okay, look at an example now. Market is still coming down. MACD looks like he wants to go up. So pretty soon, should be expecting a reversal on GPY. So my eyes will be on it. You know, that kind of a way. And already I'm seeing a kind of bearish descending right here. And MACD is showing me that it probably wants to go. When there's a turn here, the first turn, and I see a turn here, I begin to look for a possible bullish move right there. Okay, that's at the current market price. So this is how you can use this strategy. It's a very good strategy, and it works also. It works also. It works very well. Okay. It works. By the time you scan through 20 pairs, 10 to 20 pairs, you should see at least one that will be giving you a pattern like this. All right. My screen is blank. Is it still blank, Mr. Ayodele? 946. Is my screen still blank? Others, is my screen blank? Oh, okay. I was almost, I wanted to be shocked because I've spoken for a long time. Okay, all right. Does anybody have any question? Let's go to question. Then we'll now probably analyze one or two currency pairs before we go on this particular strategy. On this strategy, let our question be specific to what we have discussed today. On this particular strategy, do you have any question? So just indicate and I will unmute you. If you have a question on this strategy, indicate and I will unmute you. While I'm waiting for question, if you want us to look at any currency pair or something you looked at today, you can put it in the chat box. Okay, while we take questions. Mr. Ayodele.
Coach, good evening, sir.
Good evening, sir.
My question is this. Looking at your chart now.
Yeah.
At the bottom where we have the inverse bridge, you can see that, yes, the signal line down, the signal line is going up.
Yeah.
Yes.
Yes.
The signal line is going up while the price action is coming down.
Yes.
Between those periods, and what do we do? Should we wait?
You wait.
Okay.
You have to wait until this one gives a reversal, and you now see that this bridge can grow and grow bigger than what you see here. Okay. Can grow bigger.
Yes, sir.
See, if you're supposed to have traded this, you'll have traded it right here. You'll have traded it right here. Eh?
Okay.
And taking profit where? Yeah. Okay? This will have been a move, but that's about 20 pips. But since you missed this small 20 pips, you wait until there's a completion, until you see a pattern. You see that MACD has turned, okay? Once MACD turns, that's the main turns, okay? And you can be able to see that price came below. For example, price must come below here. Something like this. Okay? And MACD goes something like this. Then you know that you have a divergence. So you just have to wait. Don't jump into the trend.
Okay.
All right. Any other person with question? Mr. Clement, I guess. Mr. Clement, let me ask you.
I'm the one that asked questions, sir. I'm the one that asked questions.
Okay, all right.
Hello, sir. Yes, sir.
How are you, sir? Yes, sir.
Fine, sir. Thank you, sir. Now, in the MT4, MACD showed just one line. But when we go to trade view chart, MACD will show two lines. What is different? That's the first question. The second one is that what is the difference between MACD and TDI?
Okay. What is the difference between MACD and TDI?
Because I know that they use TDI also to look for divergence.
Divergence, all right. Thanks for that question. Now, people have different ways by which they use MACD. Now, this is a default MACD. Default. When you say default, that is how it came with the MetaTrader 4. Now, thousands of people have worked on this MACD and created their own type of MACD. But let me go to TradingView. TradingView has where you have two lines. Okay, but this default MACD does not have two lines. For example, this is another form of MACD. Bill Williams, also oscillator. If you look at it, it's also another form of MACD. It's almost the same thing. So somebody just took this MACD and also converted it to his own style, so that whenever market is going up to be green, whenever it's coming down to be red, going up to be green. But you can see that is the same thing. So there are different versions, custom MACD. I can also bring up some other ones that I probably downloaded that look like MACD also. Okay, let me see if I can see anyone here. Oops. Okay. This is another one. Somebody took MACD and created his own style. This is the one. This is the type of one that you see in the type of one that we see on trading. Somebody created this. Okay, somebody created, but you can see it's the same MACD. So you can get thousands of different types of MACD on the internet. Just go to Google. So people create their own different kinds of MACD. Now you asked about TDI. TDI is somebody is not, you can't see TDI on MT4. You have to get it from the person that created, or somebody that has it, and then you have to install it on your MT4. Okay, somebody created TDI. The person also uses combination of moving average, RSI, to create his own indicator. Okay, and so TDI, that's Trader Dynamic Index. Trader Dynamic Index. TDI is somebody's indicator. Somebody created it. You yourself, if you know how to program, you can also create your own indicator. And if people like it, they begin to use it. So TDI has become one of the popular indicators that people use. And you can also use it to get divergence. But it may shock you that divergence you see in TDI, you may never see it on MACD. Okay, the divergence on TDI may be different from divergence on MACD. Okay, I have a TDI. I think I have a TDI around here. Okay, so this is a TDI. It's not every time that they match. Okay, but for me, I've grown to love even the MACD more than the TDI. I've grown to love MACD more than TDI. Yeah, TDI gave us divergence also here, and MACD gave us divergence here also, while price was going up. So they matched here. Okay, MACD also gave us divergence here. TDI also gave us divergence here. Okay, so now we have divergence here, divergence here. So it's you can see that people just like the way something look. They just prefer to do it their own way. So nobody just did this his own way. This divergence also. So same thing. Almost you might get this divergence here, this divergence here, divergence. Okay, here MACD did not give you divergence. MACD did not spot a divergence here. MACD was going down, price was going down, but TDI gave you divergence here. Okay, which worked fine. So it depends on what you like, what indicator you put on your chart that will give you. There's a divergence here, there's a divergence here. So both MACD and then TDI gave us divergence right here. So the difference between the two of them is that they are two different indicators. So see, there are millions of indicators in the market. Millions. You can't finish all the indicators. Millions of. There are some that you need to buy. There are some that that are worth $500. Some that are worth $1,000. Okay. So there are millions of indicators. So it now depends on you, the one that you use. Okay. Me, I'll pull up my MACD before I pull up a TDI in my own trading. So it depends on you. It depends on what you like. So what is important is that you get the results you're looking for. If you're looking for divergence, use TDI. You can even use RSI for this same RSI plus divergence. You can also use RSI to get divergences in the market. Where's RSI? But I don't really like the look and feel of RSI because it doesn't really give you much. You can see here, it gave you something here. But for any divergence to, you see, it gave you divergence here also. So you can see this divergence. So it depends on what you like, but I prefer the MACD divergence than any other, even than TDI divergence. So that's it. So let's take one currency pair. Is there another question? All right, let's take one currency pair. Someone should drop a currency pair. Let's quickly look at it and then we call it a day. It's 10 already. AUD USD. That pair, show us paper yesterday. So let's look at what it's doing. But I think it wants to go in direction of the higher time frames. That's what is happening. Just a minute, I'm coming. I'll put it up. AUD, where are you? AUD USD. AUD. This is what happened yesterday. It gave us a reversal pattern. This is what happened yesterday. Give us a reversal pattern. Actually dropped, but it didn't pass this level of resistance. I was expecting it to drop further to around this. This was where was I, but eventually it took us out here. It took us out here and then rallied up. So this was what we were looking at yesterday. Alright, but let's look at what the market is doing currently. Let me remove all this. I've done what he wants to do now. Okay, so just looking at the monthly time frame, just want to see areas of confluence. Of course, we have support here. So price is actually is going up from the monthly time frame. So we can see generally that AUD this month has been bullish, so it's in a bullish trend. AUD this month has been a bullish trend. Okay, and then the next area of support, monthly support or resistance, is here. So we can see it broke out from here and then probably has not want to come back to that place. So from the weekly time frame, we can see price is moving towards going back to this area of support. So what it did for us yesterday should not be surprising. Should not be surprising, okay? Because we moved in direction of daily time frame. Actually broke out. what it did yesterday was to break out. See this yesterday's candle. It's a new day, so we can see that the market is trying to start a new day. So yesterday, what it did was to break. It broke out from this resistance area. Okay. It first gave us a fake rejection. You can see it gave us a fake. This was hold on. Okay, this is 4 hours time frame. Okay, this was yesterday. You can see. Really, I think I was even the one that really should have known that it was retested. This was what I saw yesterday, right? If you saw the chart I sent, this was what I saw yesterday. But actually, market broke out from this resistance. Wow, broke out and came to retest. So we just have taken out our profit. Okay, I think it was on 15 minutes that we looked at it. For 1 hour. Let me see. What chart did I send that day? Okay, it was the 1 hour chart. So it's the 1 hour chart I sent the house. This is what I saw. The bank got to drop. Okay. Unfortunately for me, I really did not. If I had seen this, I probably might have known price wants to break, wants to go up. So AUD is a strong bullish market currently. So just broke out from a higher time frame resistance, converted to support. Okay, and today market rallied, so it's continuing its journey. So and then when it continues its journey, what is going to do is to form another high. Okay, then do a little bit of so as it is now, don't be deceived. This market may be doing something like this, but you don't know what it's going to do. But for me, already I know this guy is bullish. So this is where the market is currently. This 1 hour time frame. Okay. So it's a bullish market already. It has broken out of this place. The next level is here. The next level, it may play a bit around here. It may play a bit around here. But ladies and gentlemen, I'm not sure if the ladies are in the house today. Ladies and gentlemen, that's where price is coming. This guy is coming here. Don't get it twisted. It has already reached. See this area here. Okay, it has not even reached it. So this is the first point where it might also range. Can range around here, but you got to come here and then come up here. So this market is bullish. You should look for bullish opportunities on AUD. Bullish opportunities on AUD. Bullish opportunity on AUD. So whatever it's doing is just retracement to form a lower low and then rally again. So that's what I can see currently on AUD USD. We are going up. We are going up. We are going up. Up, up, up. We are going up. To this point and then to this point. So that's that for AUD USD. Does anybody have any other observation? This could have looked at, you can see on the 15 minutes time frame. You might probably cut this plate. I don't know. Let me bring him back. Let's see. Was it a trade to catch? No. Well, looks like it, but This guy went higher. This guy went higher. So we would have cut this. This won't be a good trade. So what we are looking at is bullish. So we have to wait till probably tomorrow, or we're ready tomorrow, but we have to wait for price action. Now see, MACD is coming down. I want it to come back up, and then I come in. See, when it's coming down, it has dropped below the zero level. I want to start coming back up, and then I look for opportunity to go high using the MACD, or in the 1 hour time frame. I look at if when price comes back to this area of support that is creating, okay, or when it breaks out from here. So I take it from here up, or when it comes to this area, break out, and then I take it off. So that's for AUD USD. I would like to stop now. I'm very tired. Mr. Biodo, I can't take GG. I can't take GG for now. Okay.